Welcome and thank you for tuning in. In Canada, an appraisal is always required when you're purchasing a property. There are a few major appraisal companies in Canada that we revert to. FNF here, who I have today joining us on our call, is happy to have you on today, is going to talk a little bit about appraisals. What is an appraisal? How does it work? And why do we need one? So I'd like to introduce JP Webster from FNF Canada. JP, thank you for coming on today. Really wanted to just do a quick intro, just to give a little bit of a background. FNF Canada has been around since 2007. They've typically facilitated a lot of the appraisals with banks and with the insurers. Since a year and a half ago, FNF Canada has now entered into the broker space, which I can't thank them enough for doing so. If you're a broker or another agent in the industry, their system and their process is so seamless, it's so fast, you're not going to want to miss what they have from a customer service perspective. So please, John, I'd love to introduce you. Please come on and please, I'll pass it on to you.
Yeah, no, thanks so much for having us on the call today, Chris. I really appreciate, we at FNF Canada really appreciate it. And I've very much been looking to this call since we spoke about this last February, and really excited to, get the word out about FNF Canada broker appraisals and, add some value to the marketplace.
So why did you guys get into the broker channel, actually? Just a quick on a side note, what got you into the broker side?
Yeah,
I know it's been about a year and a half now, and I onboarded as soon as I.
So we've been in an appraisal management company since 2007, and as you said, we've been mostly historically direct to lender, or we may have already facilitated an appraisal for you through one of the default insurers, right? So historically, we completed approximately 250,000 appraisals per year, and last year alone, we completed over 400,000 appraisals. So this is not a new operation for us. And, we've been really excited and, to expand out to the broker market and provide some support and, be better and not the same than other appraisal management companies out there. So why we got into the broker channel? So the first thing, one of the biggest, when speaking with brokers, what they love and hate about appraisal management companies, or AMCs as it goes by, is that when the AMC would come back to the client or the broker for additional funds. Now, this could happen for several reasons, but knowing and recognizing this pain point, we've introduced like a flat fee pricing model to keep a cookie cutter appraisal a cookie cutter price.
Gotcha. Okay, good. And what is that flat fee pricing? Like, how does it work?
Yeah, great question, Chris. So for a full appraisal in Ontario, we do appraisals all across Canada, and the pricing varies. But for the purpose of this call, we'll talk about Ontario. But please, if there's any questions about pricing, reach out to me directly, and we'll talk about a contact that you could reach out to after the fact. So in Ontario, for a full appraisal, it's $299 plus tax. For a rural property in Ontario, it's $364 plus tax. And remote is a quote just based on what the volatility of what a remote property could be, right? Like it could be a little shack in the woods, or it could be an NHL player's cottage. So that's on a quote basis. So for this flat fee pricing model, FNF Canada chooses the appraiser on your behalf. And I would imagine this is probably the option you've chosen the most with your appraisal orders, right? Mm-hmm. So included in this flat fee pricing is mileage and rust services. We support dwelling types up to a duplex, triplex, and quadplex. We've included waterfront properties in this flat fee pricing model as well. And we set the executive property limit at $2 million, which we think gives you a lot of wiggle room, and it's very healthy, price for the market right now. And also for rural properties, it supports up to 10 acres in one outbuilding. Now, depending on the lender, you could add on additional services, you could add on a market rent, and so forth. Now, the only time the flat fee pricing model goes out the window is if the appraiser comes back to us for an amount over $750. At that point, that's the only time we come back to either you, the broker, or the client, whoever's paying for the appraisal, and ask you to pay for the whole difference. And we've run the numbers on this, and this happens less than 5% of the time. And I think, Chris, in the last 50 or so plus appraisal orders, I don't think you've ever run into a situation where we've had to come back to you for additional funds, right?
No, not me personally, not from all the ones that I've done in the last year and a half. I think there's probably over 100 of them that we've done together, and I've never had anything come back on my end.
Yeah, great. So yeah, you know, if it does happen, you could probably predict it ahead of time. Like when the flat fee pricing goes out the window, if the property is valued at 2 million or above, right? That would be a quote from the appraiser. We also have the option, depending on the lender that we're set up with, you can also select your appraiser, but that depends on, that would be a direct quote from the appraiser, right? And we're not going to quote you just their base price. We're going to quote you their full quote just to eliminate that other pain point of just, you know, charging the client the base price and then they have to submit their quote and then you get the rest of the payment fee. So we've kind of tried to eliminate that as well.
And for our listeners, let's just kind of go back a step. Like, what is an appraisal? Like, what is it meant for? Why do we need it?
Yeah, so that's a great question, Chris. So an appraisal is an assessment of a property conducted by an appraiser to determine its current market value.
If I can just kind of chime in to all of our listeners, if you decide to purchase a property with less than 20% down, the insurer is the one that represents you and takes on the appraisal on your behalf. If you're putting more than 20% down as an owner-occupied home, or you're buying a rental property, an appraisal is always required to confirm the value. With a rental property, if for whatever reason you don't have a tenant at the moment or you don't know what the market rents are in the area, the appraisal companies such as FNF will also include what's called market rents to give us an idea of how much that property can be rented out for, which will help you in the future to be able to rent out your unit. But with that being said, you know, I think for those of you who don't know who the insurer is, I'd like to give a big shout out to our friends at Sagen, who was on our last call. They are the insurers that insure you as a buyer to ensure that you can get into the property with the least amount down. What happens? Like, why is an appraisal required? Like, what does it do?
Yeah, so a lender needs to secure its loan. That's like the basis of what an appraisal is required. So lenders give home financing loans such as mortgages and HELOCs based on the appraised value of the property, right? So the lender needs to ensure that in the case of the borrower is in the unfortunate situation where they default on their loan, there's enough interest in the property so that their loan can be recovered. So for instance, just like keeping it really simple, right? So a lender doesn't want to lend $1 million on a property that it's appraised at a value of $800,000. Right? So, you know, they just want to make sure there's enough equity in the home in that unfortunate situation and that everyone's protected accordingly.
And what are the two most important things that an appraisal is involved in an appraisal?
Yeah, so it determines the current market value so that a lender can finance a property according to like the government guidelines and risk tolerances. And it also captures, the second thing is it captures any environmental or structural risk that may affect the future integrity or value of the property. So some examples of things that would affect this is evidence of prior illegal activity, right? Mold, or if there's any structural issues. So the appraisal will take into account all of those considerations.
But what kind, like, I know there's different types of appraisals. Can you expand on those? Like, what are they and what's the advantages and disadvantages behind each one?
Yeah, so another great question. So there's 4 different kind of appraisal products we offer. We offer an AVM, which is called an automated valuation model. We offer a desktop appraisal, which sounds exactly what it is. We'll go into that a bit further. We offer a DriveBy appraisal, and we also offer a full appraisal.
And when are they used? Like, when do we use each one, and what's the best times to use them?
So let's go one by one, right? So for an AVM, it's an automated valuation model, and it takes about 60 seconds to come back, and it's driven by market data, right? So there's absolutely no appraisal involvement in it, and it's computer generated and takes data from MPAC and real estate boards, etc. An AVM also is almost instantaneous. There's no human involvement in it at all.
So the data is just compiled in the background, and it's kind of gathered to say, yes, there's enough data to say that the value is what we think it is, and it's auto approved essentially.
Yeah. So it's useful when you have available data on recent sales for very similar properties. An example of this would be like similar units in a condo building or similar condo buildings in an area.
And does it matter of how much equity is in the property? Does it matter on the loan to value at all, or?
Yeah, another great question. So it's used for properties that have a lower loan to value ratio, usually around below 70 to 75% loan to value or less.
So that was the AVM. The next most popular one is
A desktop. Yeah.
the desktop.
So it sounds exactly like what it is, right? So a desktop appraiser has an appraisal involved, different from an AVM, but there's no property inspection. It's not as in-depth as a drive-by or full appraisal. The appraiser is looking for comparable sales and determining the property valuation on the basis of similar sales within the area.
And then the last, there's two more. One I know of, the full appraisal, which we do regularly. If you can maybe
so there's a drive-by. A drive-by is the next one that comes up. So a drive-by involves having the appraiser do an exterior inspection only. They'll park outside. They may need access to the backyard for some exterior photos, but so it's the full appraisal is the biggest difference, right? And like just something to note about the two desktop and drive-by appraisals, you're not going to capture any interior upgrades for the property. The value is most heavily determined based on the sale of the prices of similar nearby properties and not so much about value adjustments. Value adjustments are made when you have similar properties that serve similar purposes but may vary in some aspect of quality. So when you're doing an appraisal that doesn't contain a high volume of material adjustments, you're not going to capture the difference in the value that may be due to the changes or the renovations for exterior upgrades on the property. And the best appraisal product that will capture this is a full appraisal.
Oh, I see. Okay. And if I my clients, or if I pay for an appraisal, it's the bank that owns the appraisal, correct? It's
exactly. Further to the full appraisal, it's the most involved product, right? So typically before COVID, the appraiser would inspect the interior of the property and make sure any adjustments like renovations, upgrades, and difference in quality from the home from comparable sales, and make note of that, right?
But during COVID, during COVID, what were the challenges? Like, what did you guys face? You know, I know there's a lot of appraisers that kind of shut down, just closed up shop. A lot of them were short-staffed. A lot of them didn't feel comfortable going into the property itself. What were you guys doing to work around all of that?
Yeah, so as everybody's dealing with these challenges of COVID and the changes to like workplace and marketplace, we're trying to, make it as safe as possible for everyone involved. So right now, the appraisers will not go into the property if the clients do not want them to. If the clients absolutely or the inspection contact do not want them to inspect the property, we rely now on the clients or somebody who has access to the property to provide pictures of the subject appraisal property, if that makes sense. So they may not be able to perform the full inspection walkthrough, but the full validity of the appraisal report can still be achieved through collaboration with either the homeowner or someone who has access to the property as well. Now, like there's some contention around like how has this changed appraisals work, right? So when they appraise a property, the appraiser's putting their license on the line, so they're doing all the due diligence to support the value that they give, right? Sure. So for the most part, I haven't heard of any problems with clients providing it. It's just, the appraiser probably would prefer to do it themselves because then they have to rely on the clients or the inspection contact to provide photos for the property, which may hold up the file.
I'm seeing a lot of in today's market, especially, I'm seeing a lot of quick closes. I'm seeing a lot of multiple offers. On top of it, we've got a shortage of inventory. What happens if somebody comes to me and says, Chris, like the last client came and said, well, we need to close in 17 days, and I always get concerned to say, well, is the appraiser going to be able to do his job? Is the lawyer going to be able to do their job? Am I going to be able to do mine? Is the lender going to be able to do theirs? So what happens in that instance from an appraisal standpoint? What's the turnaround time for you guys when it comes to that? And is there an additional fee that needs to be paid in the event that we need to do a rush, as an example?
Yeah, so if you choose the FNF managed model where we choose the appraiser, rush is actually included in the pricing, right?
Awesome.
So if it's like a super rush, then it might go over that $750 threshold. Yeah. But like depending on what lender your BDM or your underwriter at a lender tells you what kind of appraisal you need, like it's an integral part of the process, right? So It's we can do it, but you may fall into that category where the price increases, because the turnaround time can be affected, right? Like in the GTA, there's a high density of appraisers, which typically results in a faster turnaround time, right? Conversely, there are some areas with a low density of appraisers, such as like Northern Ontario, Sudbury, and Cottage Country, and this could kind of put a strain on appraisal times. So right now, as you know, Chris, there's more mortgages going around than there are appraisals to service the mortgages, right? So, we try to do everything as quickly and expediently as we can to meet the clients, to provide a good experience for you and the client. So we can absolutely do it, but just be forewarned. It's best to get the appraisal done at the beginning of the process, right? So just be forewarned. If it's a super rush, it may be an additional fee, but it's a file by file case basis, pretty much.
For sure. I guess the magic question is, what happens in the event that the appraisal comes in lower than what the buyer purchased the property for? Yeah.
So it does happen. We have a process in place. Like, we're here to support you. We're here to support the client. We do have a process in place for what we call a value appeal. Now, what we need for a value appeal is comparable sales, different from the actual appraisal report, right? And the rationale to support the valuation. So we'll go to bat for you to take the value appeal to the appraiser, but ultimately it's up to the appraiser whether or not they stand by their value or make an adjustment.
And then if that ends up happening, then technically the out-of-pocket money is on the buyer's behalf. They would have to make up the difference of whatever that shortfall would be.
Yeah, if it goes over the $750, like hopefully it doesn't. You're just paying the flat fee pricing. But Rush is included, and on our portal we do have a little tick box that you could click as a Rush. We just require a brief description as to why. And if it's a purchase, please to make sure you put your COF date in so that we could, let the appraiser know we need it for X date.
Well, and if anyone else in the industry that's looking to get in contact with FNF, what's the best place? Where can they go? How can we get them up and running? How can they be as happy as I am with all of my appraisals that I get done? I can share with everyone that I've never really had to call in once to escalate a file. But in the last year and a half since I got onboarded, I've never had any issues. It's very seamless. It's hands-free. I don't have to wait on hold. I don't have to call for any questions. It's done on the back end. So if I can help anyone else in the industry to help them with appraisals, where's the best part? Where can people go, JP?
Yeah, so the second pain point we've heard from brokers was lack of communication from the appraisal management company. So for this, we put a heavy focus on client and broker experience. So keeping the open lines of communication through a dedicated contact center at our head office, and a regional manager is dedicated to each broker within the different markets across the country. And our contact information is actually on our portal on our website. So there's multiple avenues to reach out to. There's no question too big or small. We're here we're in the business of answering phone calls. We're in the business of answering emails in a timely fashion. We're here to support the broker for whatever escalations they have, and to make sure we get that file completed for them.
JP, I can tell you your service and just you on its own representing FNF Canada. I can't thank you guys enough for all of your support. It's been an amazing experience for me and my team. I can't thank you enough for joining me on this call today. I definitely do hope that we do see each other again, and I will definitely ensure that we do more business in the future. I do look forward to seeing you again, and I'd love to have you on again at another time.
Yeah, for sure. And just so everyone knows, we have an inside sales team. If any brokers are interested, please reach out to Broker's Choice at fnf.ca. And also, you could get to our Broker's Choice Connect Plus portal by visiting www.fnf.fidelitynationalfinancial.ca. And please click the Broker Connect link. That will take you to your portal where you can self-register or submit any appraisal orders. Also in this portal, you can see any of your open settlement files with us as well. So it's kind of a one-stop shop, and minimizes the brokers having to go to multiple portals. And yeah, Chris, thanks so much for the support. We really appreciate it. We really look forward to work with you in the broker market, and all the best to everybody in 2022 and the years to come. We're really excited. We're thrilled to have you on board as a client. We really value and appreciate your business, and can't thank you enough for reaching out to me and promoting FNF Canada broker appraisals, and looking forward to working with many more brokers on many more files.
Thanks, JP. Much appreciated, my man.
Thank you, Chris. Have a great day. Talk to you soon.
Thanks,
yeah,
JP.
Take care.